Hey guys, in this video, it's going to be a shorter one. I'm going to give you a full update on my progress for my Grow My Portfolio 2020 challenge. I'm going to tell you what the challenge is, I'm going to tell you where I'm at with it, and then I might as well show off some of my dividends. Alright guys, so this is my Fidelity portfolio. It is a mix of dividend stocks and growth/value stocks. What I'm trying to do as far as this challenge is to get my portfolio from where it is now to $25,000 by the end of the year, by December the 31st, no matter what happens in the market. And so far, I think I'm doing pretty well. Right now, I am just about to hit 20K, and pretty much my deal is that at the end of every month, my strategy is to put in $1,200 into my money market, and then depending on if any opportunities pop up, I will put money into that, but otherwise it will sit in here. Right now, I have 5 months between now and the end of the year. So if I put $1,200 at the end of each month, I should hit over $25,000 right at the end of the year. That's assuming the market stays flat, which it's definitely not going to do. In addition to that, I'm also putting in any extra money I have, somewhere towards the middle of the month if I think I'm going to have extra saved over. Like, for example, in the middle of August, I'm probably going to dump an additional grand into this money market account. So I'm pretty positive, unless the market tanks, that I should make my $25,000 goal. And if I make it early enough, I might set a lower stretch goal, but we'll see what happens. So far, I'm on track. Let's go over my positions real quick and any notes I have for each one. Bank of America, I am up 4.25%. Cloudera, I am up 11.98%. Now, you may have noticed that last week or the week before, I was up like 70%. Well, that's because on Tuesday, I bought an additional 63 shares. I released a video on Monday, which you can find up here, where I pretty much talked about how I wanted to increase my position in Cloudera. It's a stock I believed in, but at the time, it was less than 1% of my portfolio, which I found was unacceptable. So I wanted to, get rid of the vanity metrics of saying I was 70% up in the stock, put my money where, in stocks I believe in, and then I think that over time, over the next 5 years, this position is going to make me quite a nice chunk of change. But anyways, Cisco, I am up 7.11%. Facebook, I am up 36.93%. Intel, my newest position, I am down 3.66%. I'm waiting for this thing to drop to $45 so that I can, further my position. Like, it's a company that, I released a video last week on it. It's a company that has fallen on hard times, and I've decided, I think it has turnaround potential. However, I need to maintain some sort of risk mitigation. So, in order for me to complete a full position on this, I need this to hit $45. At that point, I will probably complete the position, and then that'll be it for the time being. If it drops out more, I probably won't add any more, because the whole point of Intel is that it needs to get its production shit back together. And if it doesn't do that, it's still going to be profitable for a period of time, at least as far as dividends. But if it doesn't fix its manufacturing, it's just going to keep chipping it. It's going to keep losing market share to AMD little by little over the next 10 years. So I got to have some sort of risk management here. Realty, I am up 26.78%. Pfizer, I'm up 15.22%. Qualcomm, I am up 40.52%. They recently had earnings. They kicked ass, obviously. Revolve, we are up 23.27%. Sony, we are up 14.85%. I expect this position to go up even more once the PlayStation 5 becomes a reality. AT&T, we are down 0.88%. I'm thinking about adding more shares once I get back on the dividend train, but I know AT&T doesn't have growth potential, at least not for the considerable future, not for the next couple of years. So this is only for dividends, and I'm a little worried about that, but we'll see how it goes. Tapestry, we are up 1.86%, and Uber, we are up 21.62%. I'm recording this on Wednesday. Tomorrow they have earnings, and depending on how the earnings go, I may do something with this position, but we'll see. But anyways, that gives me a total equity of $19,690.56, and that leaves me up 15.89%. I have a $2,300, almost $2,400 gain on this. So as far as the next moves I'm going to make, other than adding money to my money market, if Intel drops to 45, I'm going to add positions to that. If Cloudera drops anywhere below $11, I'm going to add more shares to that. Other than that, I think I'm good as far as the number of positions I own. I want to build my portfolio tall and not wide, and I'm already starting to feel my portfolio is too wide. Now, I know I made a video on Monday where I talked about Tesla. I'm still not ready to pull the trigger on that. Like, I'm still not 100% ready for that. So as far as dividends, I use a free app called TrackYourDividends.com. It's free. I mean, it runs ads, obviously, but other than that, it's free. You just create an account, and then you go. Now, just to be clear, so this right here is not its own self-contained portfolio. So these right here are records that I manually add that point to records here. And they don't automatically point. I have to go into each position, and I have to add the ticker symbol, the number of shares, and the cost basis of my holdings. And every time I add to one of these positions, I have to go in here. I have to go here, enter the ticker symbol, the number of shares, and the price I paid per share. But other than that, that's the only thing I have to add. So it's not too big of a deal unless I have like tons and tons of dividend-paying positions, which I don't. Other than that, I mean, it keeps track of the price automatically. It keeps track of the profits, the dividend yield, the yield and cost, and the annual income. So one of my favorite parts of this app is the annual income. So the way I look at my dividends and how it benefits me is that it's like a raise to my normal annual income I get from my job. So if we go up here, we can see aggregate numbers. So if I do nothing at all for the rest of my existence and the dividends never go up, I should receive a bonus of $360 a year to my salary. And that's how I look at it. Now, it's not much, but as I keep adding more to these positions, and I will once I feel comfortable, this annual income is just going to go up and up and up. Where we're going to go is right here to dividend payments. So this right here is a log of all the dividends I received since I started using this app. So on May the 14th, I got $2.84 from Realty. On June the 4th, $5.85 from Pfizer. June the 14th, $4.25 from Realty. June the 24th, $13 from Qualcomm. June the 25th, $11.20 from Bank of America. July the 14th, I got $4.27 from Realty. July the 21st, I got $19 from Cisco. And on August the 2nd, I got $15.90 from AT&T. So I don't have a lot of dividend-paying positions, and I don't want to add a lot more. Again, I want to build tall, not wide. So I don't have a lot, but the dividends I'm receiving are slowly starting to balloon. So it's a good sign. But anyways, this was just a quick vid I wanted to do to show off my portfolio progress, my dividend progress, and all that stuff. I don't do that enough, and I should probably start. But anyways, I hope you enjoyed this. Thanks for watching, and eat your vegetables.